Hello everyone, today I will be discussing the general ledger and the balance sheet. Now the general ledger is a summary of the financial effects caused by the transactions that occurred throughout the period for each individual account. And entries to the general ledger consist of 5 parts: the date the transaction occurred, an explanation of the transaction, a reference to which page of the general journal the transaction was recorded upon, the amount the account was debited or credited during the transaction, and the balance in the account after the transaction occurred. I will now prepare general ledgers based on the above journal entries, which are from my video on how to write journal entries. And for the dates, I will use A, B, C, D, and E as the dates the transactions occurred. For the explanation and the reference, I'm not going to fill those out because those are largely irrelevant for Intro to Financial Accounting courses. And then I will assume the beginning balance in each account is 0. So I'll begin with the cash account, and then I'll follow to equipment. I'll keep the assets, liabilities, and owner's equity accounts grouped together with their respective groups. So I'll begin with the cash account. And now on transaction A, the cash account was debited by $50,000, and then the balance in that account after the transaction occurred is $50,000, since the beginning balance was 0. And in transaction B, cash was credited $40,000, so the balance in the cash account after that transaction occurred is $10,000. These credits always decrease assets, and cash is an asset. So in transaction C, cash was debited $20,000, and that makes the balance after that transaction $30,000. Now in transaction E, the account was credited by $10,000. Then the balance in the account after that transaction occurred is $20,000, and that'll be our ending balance in this account for the period, since the period ended after transaction E. So now the ending balance would go on to be the beginning balance in the next period's general ledger account. So, for example, if we had a beginning balance of $20,000 in this period's, and after our first entry we debited the account $50,000, then the balance in the account after that would be $70,000. If the beginning balance is $20,000, but since the beginning balance is 0, the account is only $50,000. Because 0 plus $50,000 equals 50. Equals $50,000, I should say. Now, I will do the equipment account next. And there's nothing regarding the equipment account in transaction A, but in transaction B, the equipment account was debited by $40,000. And since the beginning balance was 0, our balance in the account is $40,000 after that transaction. And then in transaction D, the account was debited by $10,000. And then our ending balance for the period, since that's the last transaction regarding equipment, is $50,000 in the equipment account. So now I will do notes payable. And in transaction C, notes payable was credited by $20,000, and our balance after that transaction in the notes payable account is $20,000, and these liabilities always increase with credits. And that's our only transaction regarding notes payable, and our next account is accounts payable. Now for our accounts payable account, in transaction D it was credited $10,000. Making our balance after that transaction occurred $10,000, and then in transaction E it was debited by $10,000, which makes our ending balance in that account 0. And now contributed capital is our last account, our loan owner's equity account for this simulation. Or contributed capital. And in transaction A, contributed capital was credited by $50,000, and that makes our ending balance because that's the only transaction regarding contributed capital for the period. That makes our ending balance $50,000, since owner's equity accounts always increase with credits. So now I will prepare a balance sheet for this period. And the balance sheet is a snapshot of a company's asset, liabilities, and owner's equity accounts at a given date, and it's usually recorded at the end of the period. So I will prepare a balance sheet for the end of this fictional period that I made. So on the balance sheet, you always put your asset accounts first, and then you follow them with your liability accounts, and then your owner's equity accounts. So I will show you how our balance sheet works now, and I will prepare it for the end of the period, which means I'll be using the ending balance for each account in the ledgers. So the ending balance for our cash account in this ledger is $20,000, or for this period, our ending balance is $20,000. And our ending balance in our equipment account is $50,000. So since the balance sheet is a snapshot of the company at a given date, you only need the balance in the account at that date. That's all that's relevant for the balance sheet. Let me go ahead and total our assets up. So $70,000 would be our total assets at the time this balance sheet is being prepared. Now I will move on to our liabilities. Notes payable, $20,000. Since our balance in the notes payable account at the end of the period was $20,000. And then accounts payable, our ending balance was $0. So we're going to leave it off the balance sheet. You don't have to input it since ending balance is $0. And always remember to total up each subcategory, such as assets, liabilities, and owner's equity. So now for our loan owner's equity account in this simulation, contributed capital and our ending balance in that was $50,000. And then I will go ahead and total our owner's equity, which will be $50,000 since it just had a contributed capital account in it. And I'm going to total our liabilities plus owner's equity as well. And our total of those is $70,000. Now a good way to check to make sure everything is most likely done correctly is to make sure your assets equals your liabilities plus your owner's equity. And as you can see here, it does, so we stay true to our accounting equation of assets equals liabilities plus owner's equity, which most likely means everything is done correctly. And that is how to prepare a balance sheet and general ledgers for individual accounts. And if you have any questions, please leave them in the comments section down below, and thank you for watching.